Whoa. Okay. So the markets are really taking a beating, right?
Yeah.
After these tariff announcements, I mean, NASDAQ's down over 4%. Nike could be down like 14%.
Yeah.
It's kind of a bloodbath.
Yeah.
But then you hear these whispers, and it's like that thing Trump said, the operation is over, the patient lived. And it
Hmm.
makes you wonder, is there something more here than just like, oh, everybody freaked out?
Yeah, yeah. I mean, you've provided an amazing collection of information here, right? We've got stuff from the Commerce Secretary about their rationale. We've got this breakdown of the tariffs and the calculations and how they actually work.
Yeah.
We've got all these reactions from world leaders,
Yeah, strong reaction.
very strong reactions.
And we've got, some early analysis of what it all means for the markets.
Mm.
So our mission, if you will, is to kind of understand what's the thinking behind these tariffs.
Mm.
What are we going to see in the short term, the U.S. economy, and then what could be the longer term shifts? So maybe we can start with just the tariffs themselves, just to lay it out.
Yeah.
Seems like the first move was there's this 10% tariff on everything coming into the U.S.
Yeah, like a baseline.
Yeah, like a baseline.
Like a baseline tariff.
And then on top of that, there's these reciprocal tariffs.
Yes. That's a key distinction. And the administration is really framing this around fairness.
Okay.
Right. So, you do it to us, we do it to you.
Okay.
And those reciprocal tariffs, they're not all 10%. They're much higher.
Okay, so give me some examples, because I saw some pretty big numbers in here.
Yeah, well, China, for example. So they initially get a 34% reciprocal tariff. And if you add that to previous tariffs, you're talking about over 54%.
Cool.
There was even this visual by the Commerce Secretary where he had a figure of like 67%, which apparently includes currency manipulation and barriers to trade and things like that.
Wow.
European Union, they were originally talking about maybe 40%.
Wow.
But now, under this framework, it seems like it's more like 20%. And cars, specifically, there's a 10% tariff on cars from the EU.
Okay.
Vietnam, they're looking at a whopping 46%.
Wow.
Taiwan, 32%.
Okay.
Japan, 24%.
All right.
Cambodia, 49%.
Wow.
And even Australia, a close ally, is facing that baseline 10%.
So this isn't just like talk. This is happening pretty quickly, right?
Yeah, the timeline is pretty aggressive. So the reciprocal tariffs, they kick in April 9th.
Okay.
And that blanket 10%, that's April 5th.
Wow. So we're seeing the markets react now, and who knows what's going to happen next week.
Yeah.
So, okay, what's the thinking here? I mean, Trump said, reciprocal, they do it to us, we do it to them.
Right, right.
It sounds kind of simple, but there must be more to it than that.
Well, yeah, so the Commerce Secretary, he had this explanation, and he was basically saying the goal is to get these countries to kind of re-examine their own trade policies.
Okay.
So the U.S. wants more access, wants American goods to be able to get into those foreign markets more easily. And they're really targeting what they call non-tariff trade barriers.
What does that mean?
So that's like, maybe they have complex regulations or standards that are kind of discriminatory.
Okay.
Or maybe they have really long customs procedures that make it hard to get stuff into their country.
Got it.
So the idea is, by putting on this pressure, the U.S. can sort of level the playing field.
Right.
And then over time, American products, they'll have better access to these global markets.
Right. Right.
And they're pointing to this trade deficit.
Yeah.
In goods and services, which, back in February 2025, it was $122.7 billion.
A big number.
Huge number.
So they're saying that, okay, the current system is not fair to the U.S.
Right.
So when they say reciprocal, it's not just matching whatever tariff somebody else has.
No.
It's like they're doing this calculation.
Right. Yeah, there's a calculation involved. So the U.S. Trade Representative, they're saying that they're setting the tariffs at a rate that they think will actually eliminate the bilateral trade deficits.
Okay.
So they're assuming that those deficits are caused by tariffs and also by those non-tariff barriers that we talked about.
Yeah.
So they're like, okay, we need to impose tariffs to kind of offset that imbalance.
Okay.
And these rates, they vary wildly. I mean, you've got anything from 0% to 99%.
Wow.
The global average, if you don't weight it by how much trade there is, it's about 20%.
Yeah.
But if you weight it by the volume of imports, it's more like 41%.
Okay.
And the U.S. administration is actually saying, oh, we're being kind.
Yeah, right.
Our tariffs are only about half the average rate that other countries charge.
Okay.
But of course, that's assuming that tariffs directly cause trade deficits, and economists will tell you it's much more complicated than that.
Right, right.
Consumer demand matters, productivity matters.
Right.
So it's not quite that simple.
So, okay, we got what the U.S. is doing, why they're doing it. But as we've seen, the rest of the world is not happy.
No, they are not.
I mean, a lot of these leaders are coming out swinging.
Yeah. Yeah.
They're really making some strong statements.
Yeah, you've got von der Leyen, she called it a major blow, dire consequences,
Yeah.
said the EU is preparing countermeasures.
Uh-huh.
China said they firmly oppose it.
Yeah.
They're going to take countermeasures.
Yeah.
Japan is worried about the WTO and their trade agreement with the U.S.
Right.
Canada said they'll fight with countermeasures.
Wow.
The U.K. just said, nobody wins in a trade war.
Right.
Schultz, in Germany, he called it fundamentally wrong, promised a united European response.
Wow.
France, immense difficulty, catastrophe.
Wow.
Australia, no basis in logic, not the act of a friend.
Wow.
They said it's going to add a lot of uncertainty to the economy.
Yeah.
And then you've got Brazil, South Korea, New Zealand, Sweden, Switzerland, Ireland, Italy. They're all saying similar things.
It's like almost everybody.
Yeah.
Yeah.
Manfred Weber from the EPP, he called it a resentment day. And he was talking about Europe being united in their response.
Right.
And even Colombia, they're like, okay, we'll only raise tariffs if it actually costs us jobs.
Okay.
So, yeah, not a lot of happy campers.
They're pretty loudmouthed about it, right?
Yeah.
All these threats of countermeasures.
Right.
So this is where this idea of the hook negotiation strategy comes in, right?
Yeah.
Like, it seems like the U.S. might have anticipated this kind of response.
Mm-hmm. Yeah.
And they're factoring it in.
Yeah.
So can you explain that, the hook strategy?
So think of it like this, right? The U.S. comes out and they're really aggressive with these tariffs.
Yeah.
That's the hook.
Okay.
And the idea is sometimes in a negotiation, you come out really strong.
Yeah.
Maybe you even seem a little bit crazy.
Okay.
And that sets the stage for the rest of the negotiation.
So, like, they're being extreme, and then everybody's going to try to get back to some kind of normal.
Exactly. So the thinking is, even though all these countries are saying, oh, we're going to retaliate,
Right.
They're making these big pronouncements.
Yeah.
Ultimately, they're going to feel pressure to come to the negotiating table.
Yeah.
Because they want a better deal.
Okay.
Right. So they're going to offer concessions.
Like lower their own tariffs.
Exactly.
On U.S. goods.
Right.
In exchange for the U.S. backing off a little bit.
Right.
Okay.
So it's like, all this talk is for show, but behind closed doors, it's a different story.
Okay.
Scott Besson, he even said, do not retaliate, sit back, take it in. If you don't retaliate, this is the high water mark. So the idea is that this is as bad as it gets.
Okay.
And then things will get better through negotiation.
Okay.
And, these leaders, they have to look strong, right? For their own people. But the reality is they depend on the U.S. economy.
Right. Yeah.
The U.S. is a huge consumer market.
Right.
And if they get into a trade war with the U.S., they're going to get hurt worse than the U.S.
Okay.
So all this tough talk, it's kind of muscle flexing.
Right.
But the real action is going to be behind the scenes in these negotiations.
Okay, so that's the strategy.
Yeah.
But what about right now?
Yeah.
The U.S. economy,
Yeah.
we saw the markets tank.
Yeah.
What's going to happen in the short term?
Well, the immediate impact, you're right. The markets went down. Dow, S&P 500, NASDAQ, Q, small caps, all down.
Yeah.
VIX, that's the volatility index, it went way up.
Right.
That means investors are nervous.
Yeah.
And this isn't just a U.S. thing.
Right.
Global markets are down too.
Okay.
You look at a company like Nike, for example.
Mm-hmm.
They do a lot of manufacturing in Vietnam.
Right.
And Vietnam's got these big tariffs now because of their trade surplus with the U.S.
Yeah.
So Nike stock is down significantly.
Yeah. And in the short term, we should expect to see some inflation.
Okay, so things are going to get more expensive.
Yeah, because these tariffs make imported goods more expensive.
Right.
And you can't just magically start making all those goods in the U.S. overnight.
Right.
So those higher costs are probably going to get passed on to consumers.
Right.
And we've already seen some short-term inflation indicators starting to tick up.
Okay.
And the other thing is, all this uncertainty, it can make businesses and consumers nervous.
Yeah.
So businesses might hold back on investment.
Okay.
Consumers might start saving more, spending less.
Right.
So that could slow down the economy.
They're calling that temporary stop spending, right?
Yeah, exactly.
Okay.
But, the administration's argument is that this short-term pain is worth it.
Yeah. Okay.
They're saying that in the long run, the U.S. economy will actually be stronger.
Okay.
So even though there's all this worry about inflation right now, if you look at the medium to long-term inflation expectations?
They haven't really changed that much.
Okay.
So that suggests that the market thinks either these tariffs will get resolved through negotiation
Right.
or that we'll see a shift towards more domestic manufacturing.
Okay, so maybe the prices will go up a little bit now, but then, it'll level out.
Yeah, that's the hope.
Okay.
And there's even been talk about the the Federal Reserve cutting interest rates more than they were planning to.
Okay, so what's the thinking there?
Well, they might have to do that to kind of offset the negative impacts of the tariffs.
Okay.
If inflation gets too high or if the economy slows down too much, they might have to step in and cut rates to stimulate things.
Okay, and the dollar, it's down too, right?
Yeah, the Dixie, the US dollar index, which basically tracks the dollar against other currencies,
Right.
it's down quite a bit.
So that should, in theory, help with exports, right?
Yeah, a weaker dollar makes US goods cheaper for other countries to buy.
Right.
And it makes imports more expensive for US consumers. So in theory, that should help to balance trade a bit.
Okay.
And there's another interesting thing about the falling dollar, the falling Dixie.
Yeah.
It has to do with US Treasury yields.
Okay, so explain that.
So the yield on the 10-year Treasury note has also gone down.
Okay.
And that usually means investors are moving into safer assets, like government bonds, because they're nervous about the economy.
Okay, flight to safety.
Exactly, flight to safety.
Okay.
But lower yields also put pressure on the Fed to lower interest rates.
Okay.
And it makes it cheaper for the government to refinance its debt.
Okay.
And Arthur Hayes, he had this really interesting take on it.
Yeah.
He said, okay, if other countries are buying less stuff from the U.S. because of these tariffs,
Yeah.
they're going to have fewer U.S. dollars.
Okay.
And usually they would take those dollars and invest them in U.S. Treasury bills, right?
Right.
So if that demand for U.S. debt goes down, the Fed might have to step in and start buying U.S. debt themselves
Okay.
to keep the market stable. And that could lead to, basically printing more dollars.
Okay. So a lot of moving parts here.
Yeah.
So what's the long-term vision? Like if this all works out the way the administration hopes it will,
Yeah.
what's the end game?
Well, they're talking about a renaissance of manufacturing in America.
Okay.
They want to see trillions of dollars invested in U.S. factories.
Okay.
Lots of new jobs created.
Right.
Bringing back skilled trades.
Okay.
And ultimately, reducing our reliance on government spending.
Right, because we're making more stuff ourselves.
Exactly.
Okay.
More self-sufficient.
Right.
More balanced trade with other countries.
Okay, so that cryptic statement at the beginning.
Yeah.
The operation is over.
Yeah.
The patient lived.
Right.
It seems like what they're saying is, okay, this big tariff move, that was the surgery. And now we're in the recovery phase.
Yeah, I think that's a good analogy.
And part of the recovery is going to be all these negotiations.
Right.
Where, countries are going to have to make concessions.
Right. Right.
To get the U.S. to back off a little bit. Okay? And the markets might be bumpy for a while.
Yeah.
But eventually, things will settle down.
Yeah, I think the expectation is that we'll start to see these announcements, country by country.
Right.
Okay, we've reached a deal. The tariffs are going down.
Okay.
And as that happens, the markets should calm down.
Okay.
And, we saw something similar in 2019
Yeah.
when Trump used tariffs to pressure the Fed to cut interest rates.
Right.
So this is kind of a familiar playbook.
Okay.
And the timeline that's being talked about now is, maybe Q3, Q4 of this year, we'll start to see a more sustained recovery.
Okay, so the takeaway for you, the listener, is that all this chaos in the markets, it's not just random. This is a calculated move.
Right.
It's a negotiation tactic.
Yeah.
And the U.S. is hoping that in the long run, it's going to lead to a stronger economy.
Yeah, they're willing to take some short-term pain.
Right.
Maybe higher prices,
Right.
maybe a little bit of a slowdown.
Right.
But they're hoping that it's going to be worth it in the end.
Okay.
And I think the other important thing to remember is that all these world leaders, yeah, they're making a lot of noise.
Right.
They're threatening to retaliate.
Right.
But their economies are really tied to the U.S., so
Yeah.
they need the U.S. market.
Right.
So all that tough talk, it's partly for show.
Right.
The real deals are going to be made behind closed doors.
Okay. So here's a question for you to think about. We talked about the potential benefits if this strategy works.
Right.
But what if it doesn't? What are the risks of playing hardball like this in international trade?
Yeah, yeah.
It could backfire.
It could.
So that's something to watch as this all plays out.
Yeah, it's going to be interesting to see how this unfolds.
It's a fascinating situation.
Yeah.
All right, well, we've done a deep dive here
We have.
into this really complex and ever-changing situation.
Yeah.
Thanks for listening.
Thanks for having me.